In the background of daily headlines and political noise, something much bigger is happening, quietly, steadily, and mostly unnoticed. A global economic shift that will redefine wealth in 2025 and beyond. While the world focuses on inflation reports, interest rates, and stock market swings, the real transformation is happening underneath in demographics, technology, debt cycles, geopolitical realignments, and a massive behavioral shift in how people save, spend, and invest. This isn't the kind of change that happens overnight. It's the kind that builds slowly, then accelerates all at once. And for those who understand it early, the shift becomes an opportunity. For those who don't, it becomes a trap. Today, we're going to dig deep into the quiet economic transition shaping 2025, the forces pushing it, the risks hidden inside it, and the new pathways to wealth that are emerging right now. Welcome to Mind Over Markets, where clarity meets a changing economy. There are economic changes people talk about: inflation, high interest rates, housing prices, recession fears. These are important, but they are surface level symptoms of something deeper. Below the surface, a far more significant shift is happening. Countries are growing slower than they used to. Productivity is down, debt is up, birth rates are collapsing. Yet governments continue trying to stimulate growth as if the old rules still apply. This is why wages rise, but people still feel poor. Your salary is growing in an economy where asset prices grow faster. Credit card debt is at record highs. Savings are at record lows. Defaults are rising. Policy used to shape markets. Now markets shape policy. Low interest rates, cheap leverage, booming real estate, and easy stock market gains. All gone. These forces aren't temporary, they aren't cyclical, they are structural, and they are rewriting how wealth will be built in the next decade. But here's the twist: most people have no idea this shift is happening. To understand where 2025 is going, we need to understand how the last 15 years set the stage. After 2008, the global economy entered a new era of artificially low interest rates, unprecedented money printing, and cheap debt. This produced a booming stock market, soaring home prices, explosive tech valuations, and a sense that recessions were smaller, shorter, and less damaging. But it also produced something else: a massive mispricing of risk. Because when money is cheap, people, companies, and governments take bigger risks. Over time, those risks pile up. By 2020 to 2021, stimulus checks, near zero interest rates, supply chain distortions, and global lockdowns collided with an economy already vulnerable. The result was the highest inflation in 40 years. Governments panicked. Central banks responded with the fastest rate hikes in 22 years. Consumers responded with record debt. And the global economy responded with a slowdown that is now becoming permanent. The quiet shift is the world slowly waking up to a reality. The era of free money is over, and it's not coming back. Which leads us to the next major force shaping 2025. For 15 years, interest rates were so low that borrowing felt like magic. You could buy a home, a car, an investment property, or entire companies with cheap money. But not anymore. The Fed has made it clear they prefer slower growth over runaway inflation. Now mortgages cost more, credit cards are crushing consumers, and real estate is becoming unaffordable. The middle class is being squeezed from both sides, from higher cost of living to lower purchasing power to declining savings and rising interest payments. High rates reward savers for the first time in decades. This is the quiet shift inside the shift. The economy is transitioning from a borrower's paradise to a saver's economy. A new wealth gap is forming, not between rich and poor, but between those who own appreciating assets versus those drowning in high interest debt. In 2025, this divide becomes even sharper. The next quiet shift reshaping wealth is demographic. Aging populations in the US, Europe, China, and Japan means fewer workers and support for more retirees. This slows economic growth, reduces productivity, and strains government budgets. There is lower birth rates everywhere. Less population growth means less consumption, less demand, and slower economies. 3. Boomers are retiring at record pace. Trillions in wealth are being transferred, but in uneven ways. 4. Millennials and Gen Z are facing the worst affordability crisis in modern history. From homes unaffordable to wages stagnating, from student debt rising to cost of living climbing. This demographic reality is a quiet anchor slowing global growth and shifting where wealth naturally flows. Older generations have the assets, younger generations have the debt. This imbalance is shaping everything from housing markets to stock valuations. The world's power structure is shifting. US China rivalry intensifies. Supply chains are moving. Technology conflict escalates as trade tensions reshape global markets. Deglobalization is becoming the norm as nations want self sufficiency, energy, manufacturing, food security, critical minerals. Regional powers are on the rise. India, Brazil, Turkey, and Southeast Asia are gaining influence. Wars and conflicts disrupt economic stability. Energy markets, commodity supply, trade routes, all vulnerable. These shifts are not temporary geopolitical events. They are long term structural adjustments that reshape what countries dominate, where investments flow, which currencies strengthen, and how global wealth is created. This brings us to one of the biggest quiet shifts of all. Technology isn't just creating new industries, it's redefining what money is. 1. Central bank digital currencies, CBDCs. Nearly every major economy is testing digital currencies. This gives governments more control, but also reshapes payment systems. 2. Bitcoin and decentralized finance. These are not going away nor slowing down. A generational divide is forming between traditional finance and decentralized networks. 3. Automation and AI. Millions of jobs will change or disappear. Entire industries will evolve. Productivity will eventually rise, but not immediately. 4. The creator and knowledge economy. More individuals are making income online than at any other point in history. Technology is not just increasing wealth potential, it's redistributing it in new ways. Put all of this together: high interest rates, slowing economies, aging populations, global realignment, digital transformation, rising debt. This is the quiet economic shift. Not one single event, but a stacking of multiple pressures reshaping the world. 2025 becomes the year where these forces converge. It won't be a crash. It won't be a boom. It will be a redefinition of how wealth is created, held, and transferred. And in this environment, people fall into three categories: those who cling to the old system and get squeezed, those who ignore the signals and get buried in debt, and those who adapt early and position themselves for the next decade. So, how do you adapt? To navigate the quiet shift, you need a new strategy. Here are the foundations. 1. Cash flow, capital gains. In a high rate world, cash flow becomes king. Focus on skills that generate income, digital income streams, dividend paying assets, lower risk, long term consistent returns. 2. Avoid high interest debt, credit card debt. Adjustable rate mortgages and variable loans are traps. 3. Build digital skills. AI, automation, and online tools reward those who can learn, adapt, and leverage technology. 4. Hold assets that benefit from inflation, real productive assets, not just expensive liabilities. 5. Invest with a long term mindset. Markets will be volatile, but volatility creates opportunity. 6. Think global, act local. Diversify your exposure: geography, currency, industries. 7. Understand political and economic narrative. They shape policy, policy shapes markets, markets shape wealth. The quiet shift happening today is not a 1 year event. It's a generational turning point that defines how wealth will be created in 2025 and beyond. The people who succeed in the next decade won't be the ones who chase hype, trends, or shortcuts. They will be the ones who understand the deeper forces shaping the economy and adapt before the crowd. You're already ahead simply by being aware of the shift. Now the question is, will you position yourself to benefit from it